I know we're like, oh.
So I'm going to start out by introducing, if you noticed, we had 4 individuals with us. I'm going to try really hard. So we have Abby, Taylor, Jake, and Cole.
Yes.
Yes.
The confidence.
I kept, I was like, I kept going over. They are with Four Rivers,
Yep.
with a program called CAPS. So I'm going to let Jake come up here and just say a few words about what they do. They shadow different professionals. So, you know, we have a lot of good professionals in this room that I think that could take advantage of showing them the other side of being kind of self-employed and things like that in business as well. So I'm going to open it up to him for just a few minutes, and then we'll take over with what our plan is.
Okay, thank you. Yeah, so once again, we're with CAPS. CAPS stands for Center for Advanced Professional Studies. We help a lot with like downtown Washington and doing events for them. Like we did the farm to table. We helped set up the tables for that event downtown Washington. We've also set up some of our personal businesses that we've also offered to the downtown Washington committee to take up and maybe include into the yearly events. Right now we are doing job shadows, 8 job shadows throughout the month of April, Wednesdays and Thursdays. And this is our first one. So that's all I got for you.
So thank you guys for kind of allowing them to come in and see what we do on a daily basis also. And so now we'll get through like actually what we came here to go through.
Yeah, we did a dress rehearsal last night to make sure that all of our lines would be very smooth flowing between each other. No, we're probably just gonna bounce around a little bit talking about the program. For those of you that don't know me, I'm Danny Hyman, obviously with USA Mortgage.
And I'm Brett Kelly.
And I'm Michelle Norris.
Yeah, and so today we're here to talk to you about probably the greatest program of all time. It's the USAdvantage.
Advantage.
The A that's split always throws me off because I don't know if it's USAdvantage. We're gonna go with USAdvantage. Anyway, so what it is if you've got clients that are conventional buyers that have a 680 credit score and they have the potential to put 10% down. They just have to have the potential for it. They don't have to put 10% down. So if they're doing a 3% conventional or a 5% conventional, that's all they have to put down. But for our underwriting purposes, we send in as if they're showing putting 10% down. And they can do this a few different ways. If they're using like a 401k, we do have to get terms of withdrawal. If they have it in their bank statement, it's just a whole lot easier that way. And the other options, the bridge loan. Did you want to touch on that?
Yeah, so they can do a bridge loan as well. So not only is this a good program to allow you to write a cash offer for your buyer, but it's also a really good program for you to write non-contingent upon sale. So if they have an existing home that you're trying to sell, they're also trying to buy. The bridge loan, typically you can do somewhere between 75, if they have a really good credit profile, maybe 85% loan to value for a bridge loan. We have changed our parameters for the bridge loan for this program to 100% of their
Yeah.
So
That's
for
the
easy
greatest.
math, if they owe 300 grand on a $500,000 property that you're trying to sell, we can get them that entire $200,000 as a bridge loan to help them qualify for their new home, non-contingent. So not only that we can use that bridge loan to show that 10%, but it's also going to help them qualify so you can write non-contingent upon sale. So we're going to help you in multiple ways, not only cash, but also write non-contingent.
Yeah. And sorry, go ahead.
A few parameters when you're writing those contracts with no contingencies. We're still going to need 30 days. I suggest doing honor before 30 days. Because they're still going to be full approvals that they've already been through underwriting, but we do still have to have an appraisal. So an appraisal writer will still be needed. And we still need the honor before 30 days to make sure that we give title and appraisal enough time. Obviously, if it gets done sooner, that's why we have you write honor before, because we can always move that up and accommodate an earlier closing as it exists. Right now, this is for just a conventional buyer, 680 credit score. We are maybe looking into an option for VA, but that's not quite out yet. But we can get creative with it because a client can always change their financing regardless. So if they can accommodate, we do have to have the reserve requirement of 10% down. So we do have to verify that they have those funds. They're not required to put 10% down, 10% down. But we do have to make sure that we have that reserve amount verified in funds.
Yeah.
So as long as they have that, if they're a VA client, we can, write a conventional contract and then flip them if we need to and still do a VA appraisal. So that's an option too.
For that setup, we just did one, I did one in Charleston the other day. So what we did, the buyer just needs to know that they may have to do a conventional loan. Because the goal of this program is not for USA to pay cash for the house, 100%. We expect 99.9% of these to be
Hopefully all.
closed
Yeah.
with conventional financing. This is our selfish way. Just like you guys were tired of losing well-qualified buyers to cash buyers, which is costing you business and costing us business. So selfishly, this is a way for us to put our money behind your buyers. Our goal is to make their offer stronger, but them still use the conventional financing. So just like I said, with a VA buyer, as long as they have the 10% down, we can qualify them for this program. We can do a VA appraisal. And then if it comes back with inspections, the inspections are either gonna have to be taken care of by them outside of the process, normal process, or we're gonna have to go with the conventional loan, and they just have to understand that. But most buyers who have 10% down are gonna be okay with doing a conventional loan if they have to. It's usually the 0 down VA buyer who's really not gonna be happy with that situation. But we've written a couple, I don't know if I closed or got my first one under contract yesterday. The listing agent response was a little interesting.
Oh, yeah.
I got a call from the listing agent. He says, I'm really confused here. And I said, okay. He said, well, I have a cash offer, but I have a pre-approval with it. I'm like, well, it's not your normal pre-approval. If you look through it, and I actually read through it with them, I said, this is a cash offer. So this is USA putting our cash behind our buyers and guaranteeing you that on this, and it was a 24-day close. On this which please don't do that to us. I said, on this 24th day, USA will pay cash for this house. I said, otherwise we will have the financing lined up, which is the goal. And so this one, we wrote a $50,000 appraisal plan. So they wrote 50 over and wrote in their appraisal amendment, they said they would pay all 50 grand as a gap if it didn't appraise.
Yeah, that's something I wanted to bring up as well, because we do keep mentioning appraisal. While you can waive the financing contingencies and all that, don't have to write a loan commitment date, any of that good stuff, we do still require that there's an appraisal waiver. In very few cases, we can get an exception for that, but we have to show that an individual not even over, well, with their 10%, but on top of that, has a substantial amount of funds to be able to cover any appraisal gaps. And while you do have to put an appraisal writer on the contract with the cash offer, you can still do appraisal gap writers in there. That way, the seller can see that, yes, there is a cash offer, and they're saying that they'll pay the difference between the appraisal that has to be done on it.
And that's part of your loan commitment
Oh, but there is no loan commitment since we're writing cash.
down the road.
Well, yeah.
And
It's
just,
part of the pre-approval process.
And if-
So if they know they're gonna write 50K over in his scenario, we would verify that 50,000 plus that 10%
And it'd be on that
contingency.
letter.
And then it will be in that pre-approval letter with the cash advantage that states that we verified all of the funds.
Does your pre-approval letter in this case state in writing that you will pay cash if the financing falls through?
here's a kind of a sample of what it looks like, and any of you guys, others that want it.
Is this the one you're talking about?
Yeah, I just kind of alternated which one.
And our underwriting department is working 7 days a week. So
Yes.
They're going full force.
Yeah, so they're ready, working 7 days a week. For example, I did last Friday, I put 14 clients who were already pre-approved. I sent them to underwriting, and by yesterday, I had all 14 who were pre-approved had already been updated to this new program. So that's how hard our underwriting team's working to keep up and get as many buyers certified for this as possible, because it is helping us get more offers accepted.
The best part about this too is there is no third party. So I don't know if some of you guys have heard that New American Funding is doing something similar. Here's the difference. New American Funding buys the loan and puts it in their name. We are not doing that. When we close, if we do have to go in and use USA's money, the loan is still closing in the client's name. So that is something huge compared to if the competitors that we have that are closing it in their name.
Yeah.
So
So
not
the
only
big,
that, but they're charging 1%, no matter what. So they are going to, so New American and Ribbon is a third-party company. So Ribbons, you're probably gonna see more of them. Their goal from the get-go is to buy that house cash and then sell it to your buyer, and charge them 1%. Our goal is to charge them 0, do this as a service to them, a selfish service, because it gets us under contract easier, right? But it is a service to them that is free. And then the only reason they pay a fee is if we don't close it correctly on time, and they have to use that cash.
Yeah.
I call it the cash parachute, right? And that's what it is, that cash offer is just a parachute. If we can't get the financing done in time, then we pull the parachute cord, we pay cash, and then we figure it out later.
yeah. So the way I like to kind of describe it is, have anybody's ever seen a contract assigned where mom and dad will come in and say, hey, we're gonna buy this house cash, and then they assign it to their daughter who ends up getting a mortgage on it. It's a lot like that. Yeah, a big difference between, like he was saying, New American Funding and us, is we just finished the mortgage on the backside. If we don't get done in time, they have to do an entire new purchase it from us. It'd be more like Open Door coming in and
Correct.
buying it and selling it to them, rather than having the contract assigned over to them.
What other questions do you guys have?
Liz?
I have a question. Explain that about if they have a house to sell and what if they have a loan on it?
Oh, I'm glad.
Yep, so
Because that
exactly,
makes a
so,
difference.
yep, so they, like, we'll go back to $500,000 value, you're gonna list it at 500, they owe 300.
Mhm.
We have a gap there of 200. So we can access with 100% bridge loan, we can access that 200,000 today.
My favorite part about it is there's not an appraisal, we do an
I was gonna
ABM.
ask you. if you had an
ABM, a
appraisal.
lot quicker. Yep.
So we're gonna do an AVM, we'll give them 100% of that AVM, and they can put that as a down
When you
payment.
said 500,
They can-
you're giving them,
No, no.
I
yeah.
was just a little thinking, dang, guys.
And they can use the bridge towards an appraisal gap too,
They can
correct?
use it towards appraisal gap, and they can use it to, let's say they don't qualify with keeping their home a bridge and the money, and there's excess money on that bridge, pay off everything on credit, now they qualify with everything.
So we can use it to manipulate their debts, which will lower their debt to income ratio, which means they qualify with both.
We get pretty creative.
That's pretty impressive, guys.
Yeah,
We're
Debbie?
So I'm just curious, what would happen if they don't remain qualified before closing, they lose a job?
USA buys a house.
Yeah, and then we gotta figure it out
So
afterwards.
then you close it in USA Mortgage.
Mhm.
Then
And
yes.
sell it.
then you own a
Yeah.
house. Okay.
Yeah, yeah.
On the title side, so would that still be considered a cash buy or still considered a loan?
With, depends on when it gets done. If it's done in time, yeah, then it's straight up loan side. If we end up coming in and buying the house cash, we still put it in the client's name, but yeah.
Because, so that is the key to the 10%.
Okay.
The reason we will allow them to do a loan with a 3% conventional,
Mhm.
but they have to have the 10%, because at closing, if we have to do the cash parachute, right?
Mhm.
They pay 10% at closing.
Mhm.
We pay the 90. So we are co-owners, and then we essentially refinance us off in 30 days. So that's kind of how it works at closing, and that's why we require the 10%.
Since I know on cash deals, our turnaround times on cash deals are way faster than obviously. if we go
Are
through
you
that.
kidding? Your turnaround times on
Yeah.
everything.
Well,
2
I know,
days.
but did, I mean.
What's the quickest one you've ever done? 3 hours?
2.5.
2.5 hours, sorry. Title of
Yeah.
2.5 hours.
I'm just trying.
It's absurd.
Probably though, in our process, for you, we're gonna go through our same process as that 30 days. So you'll probably see the same title request that you've already been seeing.
Okay.
It would only be different if for whatever reason we had, what do you call it, the parachute? Yeah. Okay. It's only, I kind of like it too, it's got a ring to it.
You only pull it if you need it.
So if you needed to close, if you needed to close in 15 days, did you do that?
Depending upon appraisal, to be honest with you, because an appraisal still needed to be done.
Okay.
It depends on the time frame that the appraisers are on. As we get into the busier season, obviously their turn times are gonna change.
Yes.
We're already seeing some of that picking back up, from the kind of fall, winter, I call it break. But as we see this, and that's why we're still asking for the on or before 30 days, is because we strive at USA Mortgage period to set the correct expectation. And so this is us allowing to do that by saying on or before, because it's a third party.
Okay.
I mean, we know you're a title though, you're a third party. We can't control your timeframes. We can't control the appraiser's timeframes either.
Because I know in our cash deals in St. Louis, we can have it closed in a week. So that's, I know.
I mean, the goal, close it as soon as possible. That's all of our goals.
Yeah.
But we do have, some of those, I can promise you, an appraisal is probably not gonna be back in that time frame. I mean, it'd be great, but we'd be lying if you were like, yeah, they're coming back in 3 days. We wish they were coming back in 3 days.
Perfect.
All right.
Any other
Yes.
One more. All right. So you said that they have to have a temp, I'm assuming probably very small percentage of the loans you make, they're gonna step into that parachute thing. So, but just in case, you said 10% down, which is that going against the principal? Or is that closing cost?
Oh,
That's
That's
their
down payment.
Yeah,
Right? Then they have to come up with the closing cost in addition to. the
So they
10%.
essentially need 10% in closing costs.
And, okay, I just want to make sure.
Yeah,
correct.
Plus
You're
the
correct.
closing cost.
You're correct. Yep, they need to show, we need verified assets to show closing costs and 10%.
can't be gift funds either.
It can't be what?
Gift
Cannot be
funds.
gifted.
It cannot.
No.
But it can be taken for retirement. So if they have a 401k or anything like that that they can withdraw
And we
from,
don't have to use that. Just
correct.
that we can use it to
Just have to
verify.
show. Yeah.
Correct.
Kind of makes sense.
So we can verify it with that, and then they can get a gift later. But we have to have their funds
Yeah.
verified for the 10%.
You know. A little creative, I want to try it out first. I was gonna say, we can't use gift funds, but what if they get added to mom and dad's bank account? Then it's technically their funds too.
That's our creative way. of
But
doing
then you
it.
gotta get make sure mom and dad are on.
What says no?
No way.
Danny, look at the camera and go, hypothetically.
Yeah.
I mean, some of you have used us in the past, quite a few of you, we don't miss our dates. We don't miss our timeframes. So
Yes.
when we set the expectation of on or before 30 days, I don't see a lot of these minus your exception, right?
Yeah.
Crap happens. We
Yeah.
know that, but we're gonna do everything we can. You lose your job, you better be searching for one the next
Yeah.
day, all right? Like that's what we're gonna do. We're gonna call in friends and family and say, you hiring? Because that's what's gonna need to happen.
So something that's kind of a very small in the whole scheme of things. So if you guys do have a VA option at some point for our veterans, whenever they move into, purchasing a new home, one of the things that's a requirement is that the seller pay for the termite. Let's say they started with you all and we're gonna do conventional. We're good. You know what? Now we qualify for VA, but we've already done all the
The
inspections.
seller doesn't have to pay for it, the buyer just can't. So like this one that I just did that we wrote, the buyer's agent just said, look, I want him to use VA if possible, I'll cover the termite if we
Okay,
need
so
it.
we don't have to get another term. We don't have to require. that.
Because
So-
yes, it is really hard to go back and say, hey, we're cash.
Right.
And then we're saying, well, actually, we're trying to do it conventional, but we're actually trying to sneakily do it VA.
Right.
As long as
Because
as
if there's gonna be a change.
as long as
then
the
it's-
appraisal comes back with no repairs, we're gonna flip it to VA, correct?
Correct.
Here's the
But then we
kicker.
have to get a termite, and you're not gonna go to a listing agent or,
A seller
seller
and
and
say,
say,
oh, by the way.
by the way, we were cash, but now I need you to pay for the
Right.
termite. So
Right.
someone's gonna have to pay for it, and it
Just not. the
Whether
buyer.
it's
just
us
can't be the buyer.
Okay.
The only thing we're gonna get for it is a paid invoice. That's it.
Okay.
We don't know what card number goes to who.
Gotcha.
We're looking for a paid invoice.
Okay. And like I said,
And as long as it doesn't match the buyer's.
right, again. and the whole-
Let me just add that. It can't match anything with the buyer's.
Right, in the whole scheme of things, yeah, $65, who cares?
Yeah.
Yeah,
But
I mean,
same
at the
time,
high
If that's
side,
gonna be a trip up.
Yeah.
That would really toward the other release date. So, okay.
You're correct.
Any other questions?
Trying to think where we have.
Oh, so on these pre-approvals also, if you guys haven't seen, all of our pre-approvals right now have what's called a $5,000 guarantee. If you are not familiar with this, what this says is if we fail to close the buyer, because of, like, it'd be different if the client lost their job, because that's not something on our end.
That we do.
But we would pay then the seller $5,000.
To relist their home. Yeah.
This, what did I say?
So,
Yes, seller. Okay. I thought you were correcting me. I'm
no,
like,
no,
what
I was
did
just
say?
wanting to make sure.
Yes.
Yeah.
So that is also, so not only do you have the USA Advantage, sorry. You have the USA Advantage and you're getting that pre-approval and that $5,000 guarantee.
Yes.
And if your listing agents still have no idea what they're reading,
Call
have
us.
them call. us.
Yeah. It's gonna be more often than not. Like, are you sure this
I might
sounds too
underline
good?
that.
I really do think it's gonna take a phone call to
Yeah.
the listing agent for a while for them to really understand, because like I
Yeah.
said, I talked to that agent yesterday 2 or 3 times, and when he finally had his aha moment, when he got it, it was funny, he goes, okay, I get it. That's really simple. After I've explained it to him for 20 minutes. He goes, well, it was confusing at first, but now it's really simple. He's like, you're just gonna pay cash no matter what. Or you're just gonna pay cash if you have to, but it's guaranteed. I'm like,
Yeah.
yes. And he's like, okay. Cause he kept asking for verified funds, and I'm like, the lender is the funds.
Yeah. We're the largest lender in
And
the
he's like,
state.
well,
It's
what
us.
about, and so finally, he's like, well, what about the $50,000 appraisal gap? And I'm like, is that what's tripping you up? I was like, so I called the buyer, I'm like, can I send your assets to show you have the 50 grand? So I sent them
Yeah.
asset statements, proof of funds, and showed, yes, we can pay the 50 grand. And here's our letter showing that we're gonna cover everything, and it was fine.
And just unfortunately, we've been turned to cynics. I mean. even-
Oh, yeah. Oh, I get it.
So,
Right.
because there was someone in our office yesterday, kind of explaining, because they knew some of the ins and outs of what you're presenting today. And we were like, what? What? I mean, we were really like, are you sure that's what they're saying? So as we said, well, we'll find out tomorrow.
Oh, we'll find out.
Yeah.
Was it the same company? Or-
Yeah, it's
Yeah.
Brett Danny's program, Michelle's program, and we were just like, so I can see how others will be just so skeptical.
And honestly,
Just
I
for
wouldn't even
funds.
try to explain it. Have them call us,
Yeah.
just because it's like the telephone game,
Yeah.
right? Where if you're going through and then you're like, oh, what'd they say about that? Oh, I think it was this, you know?
I think Brett's gonna write a check out of his personal.
Right.
I think that's that. Oh, yeah.
I mean, I think the easiest
My
way to
rubber
do it
checkbook.
is if you are making the offer, shoot us a message that you're even sending an offer. Because,
Oh,
and
yeah.
as you should anyway, because we want, obviously, right?
Yeah.
We want our clients to succeed and we're a team in order to do that. So if you're submitting an offer, just go ahead and tell us, maybe send us the offer so we can see the details of it. And then we'll just call the listing agent without even, you know, you asking us or the listing agent being, what the heck is this? We'll just go ahead and call as a courtesy. Because I mean, it's really helped with the, I mean, I know Brett has had quite a few, and myself and Danny probably as well, that when we call the listing agent and just explain even that $5,000 guarantee, or our pre-approval process, because lenders are notorious for writing pre-approval with a check mark box that says credit was looked at.
Yeah. No.
Cool, you know what that is? A pre-qualification
Yeah.
letter, and it's not worth the paper it's written on.
Yeah.
So I mean, it's huge whenever you're looking at those, and you're seeing that client's really not pre-approved. They've had their credit pulled and the loan officers looked at it and said, yeah, this might work. And so that's the difference, because a full pre-approval actually goes in and submitted to an
Yeah.
underwriter.
It's signed by an underwriter.
And I coach a lot of my agents, just include me on your offer email. So you're submitting it via email, include me. Lauren actually will like put a whole paragraph of and explaining the $5,000 guarantee. Brett's copied on here. Please call him with any questions, etc., which makes it really nice, because then I know right when the offer goes out, I can chime in via email, offer to call, or just call proactively.
So, yeah, I had two last month. I got the contract and never talked to the buyer's agent once. Like, hey, here's a contract. Like, wait, what? Like, hey, you didn't write this contingent on the sale of her home or this or that, or like, okay, well, we're gonna have to restructure this real quick. So please let us know if you're working with the client and writing an offer, please.
Please.
All right.
Any other questions?
All right.
Thank you for.
Well, we
all-
all have our cards up here. Of course. If anybody needs to grab one, they can. Just to be able to have, hang them out, give them to listing agents, whatever.
Do you have anything like this for a potential buyer?
Yes,
Because that would be something that we just.
there is a buyer, I have a
You have
PDF of it.
Yes.
Would you like me to email it to you?
Yeah.
If you send it to me, I can.
I was gonna say, we can
Send it out.
actually just send it to
'Cause that's
the
kind of
board and then
that's
you
good
can
for us, but I need
distinguish
to
it out
get
from there.
Yep.
That would probably be easier.
Yeah, in fact, whatever you have in a PDF version, send me, and then I'll send out a link to this video with all the attachments so that everybody can watch.
Perfect.
Going out on a limb, we're gonna have-
I said, if I just emailed you to